What is market cap rotation? It's basically the cyclical movement of institutional capital between small cap, which is defined as 300 million market cap to 2 billion, mid cap, which is 2 billion to 10, and large cap, so anything above that. The scale of the impact here is that about 4 trillion, even more, of institutional assets, they're constantly flowing between these segments. And if you can track this cyclical flow, you can catch some really good moves and you can know which setups are actually going to follow through. Because so many times you'll see a setup that looks good in a vacuum, but without the context of whether institutional inflows are coming into the sector as a whole, the basket that it is a part of, then you could see a fake breakout. And you could be sitting there wondering, why did this breakout fail while this other breakout didn't? Well, maybe that other breakout had the legs of institutional flow behind it, and it was actually getting pushed because the whole sector was getting bid up, a demand on a deeper level, and that can be the difference. So yeah, those are the kind of things I want to talk about here today. Let's get into the details here. What's the psychology behind flow? There's risk on and risk off mentality. And risk on environment is an environment where money flows to small caps in general because they're higher in growth potential. There is more of a exuberance and a sentiment that these small companies are going to be significantly repriced going forward, usually in the context of fiscal policy or fiscal monetary policy, essentially the macro of why it might be beneficial to be a small cap stock in the market. So for example, if we're getting interest rate cuts, this is the biggest one, then their whole debt structure becomes much more appealing to investors. They suddenly become less risky. Debt is cheaper, money is cheaper. So it's these kind of cyclical frameworks which you can use to position yourself for potential big moves in some of these small cap stocks. So if we are seeing a sustained dovish environment, if the Fed bends the knee to Trump and does what he wants, we will see a lot of potential reasons. I'm not saying the move will stick, but a lot of potential reasons we could see a significant rally in small caps again. That's a risk on environment. Risk off is just the opposite. That's when money generally flows to the lifeboats. It flows to the safest names, which have the best balance sheets, the most free cash flow, the most ability to weather an economic downturn. The institution factor here is that pension funds, mutual funds, and ETFs, they drive like 200 billion or more in monthly flows. There is so much money that can push these stocks if you do catch something that will be holding a sustained bid where these people can buy it and hold it, or institutions can buy it and hold it there.